Hello class. In this tutorial we learn about the ratio analysis. So in class we discuss when you get the question about ratio analysis, you have to first create the same in your Excel, the same balance sheet and trading and P&L account. Because without this information you will not be able to use the Excel formulas. So your first step in ratio analysis question is to create the same balance sheet and trading and P&L account in your Excel sheet. This is not compulsory that you have to create it in the same format until unless it is specifically mentioned in the question paper that it should be in the exact format. So first step is to create it. So this is pretty simple. I'll not spend much time in creating this balance sheet and trading and P&L account. We'll quickly move to the calculations of various ratios. So first is current ratio. It is very simple. This is current assets divided by current liabilities, normally equals to function. These are the current assets, total current assets divided by total current liabilities. I'm using down arrow, right arrow, left arrow so that it will increase my speed in calculating the information. So I'm avoiding using mouse right now. So just press enter and you'll get the information. Next is quick ratio. So how you can calculate the quick assets? This is a very simple formula that you have to subtract the inventory and prepaid amount from the total current assets. So first we'll use the function equals to bracket open because we are using a mathematical function here. So bracket open total current assets minus closing stock minus prepaid insurance bracket close, then we'll divide it by the total current liabilities. Enter. I'll get the information 0. 0.6. Now it is third ratio is debt by equity. Debt, it is asking about the long term debt, and equity is basically a summation of capital and profit. So you can simply use formula equals to debt is this, loans and liability, total long term debt. Now you have to open the bracket because we are using a formula here, which is basically capital account plus profit. Bracket close. You'll get the answer. Next is gross profit ratio. It is very simple, which is gross profit divided by sales. So simple equals to this is the gross profit divided by sales. Simple. Next is net profit ratio. This is also very simple. Net profit divided by sales. Next is operating cost ratio. Operating cost ratio is nothing. It is simple. That is 1 minus net profit ratio because cost plus profit only makes the total sales. So you can simply use the formula 1 minus the net profit ratio. You'll get the answer. Next is return on capital employed. This is very simple. Net profit divided by net working capital. But what is net working capital? Basically, this is the amount of capital assets minus capital liability. Sorry, current assets minus current liabilities. So this is very simple. Equals to net profit divided by bracket open total current assets minus total current liabilities bracket close. Simple. Next is return on capital employed. This is net profit divided by equity. This is also very simple. Net profit divided by equity. And what is equity? This is the summation of capital and profit. So capital plus wherever it is mathematical function, we have to use the bracket signs. Close. We'll get the amount. Next is inventory turnover ratio. This is basically cost of goods sold divided by average inventory. There we have good amount of formulas. So first we'll calculate the cost of goods sold. What is it? Bracket open. Cost of goods sold is basically opening stock plus purchases minus closing stock. Bracket close. This is the cost of goods sold. Now you'll get about this average inventory. Average inventory is basically opening stock plus closing stock divide by 2. Now you have to use double formulas here. You have to use two brackets. Otherwise, what will happen if you use only a single bracket? Then this 2 will get multiplied with the whole number. We have to specifically just use divide by 2 so that this particular average can be calculated within the brackets. So first we need this average inventory as a denominator, and first is cost of goods sold. So use simple formula, enter, and you'll get the amount. So in this particular ratio, you have to be a little bit careful while using the formulas. And last one is the sales divided by net working capital. This is simple, equals to sales divide by net working capital. What is it? Total current assets minus current liabilities. This is the total current assets minus total current liabilities. Bracket close. So these are the basic simple formulas which you have to use in your paper. So make sure that you are very well equipped with all these formulas and how you can use it in Excel. If you have any doubts, you can simply ask me anytime. Thank you.